You might think that your credit score tells lenders everything that they need to know, but it doesn't. There are hidden red flags buried deep into your credit report that can destroy your chances, and even if your credit score looks good. Let's uncover what lenders are really looking for before you apply for anything. By the way, if you're new here, my name is Calvin Russell. I'm a certified FICO professional and a credit strategist, okay? And I help people just like you master your credit and unlock the financial life that you deserve. Today, I'm pulling back the curtain on credit reports, okay? Now, we're not just talking about scores. We're talking about the hidden landmines that lenders are trained to spot instantly, okay? These things will easily get your application declined for whatever you guys are applying for, okay? And by the end of this video, you'll know exactly what to look for before you apply for a loan, a credit card, an apartment, a house, whatever you're looking to apply for, you'll know what you need to look for in advance. So number one, why credit report red flags matter. Lenders aren't just looking for good credit scores anymore. They're looking for patterns of risk, okay? For example, two people could easily have the same credit score. Let's say they have a 680 credit score. But if one has a recent late payment and the other one doesn't, only one person more than likely is going to get approved for that loan without any issues, okay? Now, red flags can instantly move you from the approved pile to the denied pile, no matter what your credit score says. Number two, the top red flags that lenders look for, okay? Number one is going to be recent late payments. A recent late payment or a late payment within the last 6 to 12 months can completely crush your chances of being approved. For example, if you missed a car payment just 5 months ago, a mortgage lender will see that as a huge risk because housing payments are a priority. Number two will be high credit utilization. Running up your credit cards over 30% with their limit sends a big warning signal. For example, carrying a $700 balance on a $1,000 limit looks risky because that's 70% utilization. And that's even if you're paying on time. You want to stay under 7 to 10% utilization. Next would be too many recent credit inquiries. Now, it's not that big of a deal, but applying for too much credit too fast, it looks desperate, okay? So let's say, for example, you have 6 new inquiries in 3 months. Lenders will assume you're scrambling for money. Like they're gonna even ask you, unless it's like for a mortgage, and they say, okay, we may need you to do a LOE, which is a letter of explanation. Also, real quick, if you wanna learn more about your current credit report before lenders even see it, make sure you go ahead and grab my free credit guide. You can actually scan the QR code right here on your screen or click the link in the description below. It's fast, it's free, and it'll show you exactly where you need to start. All right, now let's get back to some other major red flags that most people don't even think about. And that's going to be charge-offs or paid collections, okay? Now, paid collections still show up as negative unless they're removed or deleted. Now, don't get me wrong. As it gets older, it has a lower weight to your credit score, okay? For example, paying off an old $200 phone bill doesn't erase the fact that it still went into collections. Lenders still count that against you. But again, as it gets older, it's not that big of a deal. It's score first and then what's on the credit report. Next would be bankruptcies or even some type of judgment against you, okay? Public records stay on your credit report for years. For example, even a bankruptcy from 3 years ago could automatically disqualify you for certain loans until enough time passes. I don't want to make it seem like bankruptcies are going to keep you from getting approved. It just may slow down the process, or you may have to explain why you filed bankruptcy in the first place, okay? Also, too, if you're serious about building a strong credit history without a traditional credit card, you should consider checking out Kobo Credit Builder, okay? You can scan the QR code right here on your screen or click the link in the description below to learn more. It's an easy way to add positive accounts that lenders love to see. Okay, so now let's keep going because fixing red flags is the key to getting approved, okay? So the next one is going to be how to spot and fix red flags yourself, because some of this stuff you guys can do on your own, okay? Now, here's the problem. You can't fix what you don't see, all right? So now here's an easy and simple 4-step strategy that you can do right now, okay? Number one, go ahead and get all 3 of your credit reports, okay? That includes Experian, Equifax, and TransUnion. Then you want to go ahead and start highlighting stuff, okay? Highlighting every negative mark that's on your credit report, and yes, even the old stuff. Then you want to start looking for things that are inaccurate. Start looking for things that are inaccurate and dispute them immediately. Next, you want to go ahead and make a simple plan to lower balances. That's going to help you stay current, and that's going to help you monitor this on a monthly basis. So for example, if you catch an account that you've never opened before, disputing it quickly can improve your credit score about 20 to 40 points almost overnight. That's assuming that you are able to get it removed. Now, the next thing would be some tips that you need to know before you apply for anything big, okay? That's usually anything that's over $10,000 to $20,000, okay? Now, this is the final checklist. Avoid applying for anything new 6 months before, unless it's helping you build your credit, okay? So next, you want to go ahead and keep your credit card balances under 10% if you can, all right? Then you want to go ahead and then set up auto payments to avoid late fees. Now, you got to be careful with this because everyone can afford to have on monthly payments or I should say auto pay. So make sure that you can actually afford to put your stuff on auto pay, okay? Then you want to go ahead and start getting in the habits of keeping an eye on your credit reports monthly, or at least your finances monthly. For example, if you're buying a house or the goal is to buy a house in 6 months, you want to start looking at your credit reports now, making sure you have the scores, because that could be the difference between a dream home and a denial letter. So remember, it's not just about your credit score. It's all about the full story of your credit report and what is that telling lenders, okay? So make sure you guys go ahead and download my free credit guide if you haven't already to get started. And also make sure you guys go ahead and check out Kovo if you're ready to start building positive history today. Let me know in the comment section if this has helped you in any way, and we'll see you guys on the next video.